Hello everyone, welcome back to FX 20 pips. Today is the 14th of July, it's a Friday. Time is now 12:20 p.m. GMT plus 8 my time. We are currently looking at the GBPUSD 8 hours chart. So what has been happening since after the US CPI and on Thursday yesterday up until today, Friday, Asia session, we can see that it is a very bullish moment from here all the way, CPI result, and then continuous all the way up to Thursday, and today Friday, that's where we are. So I am thinking that there could be some profit taking on a Friday. I might be wrong, but then we need to plan for the scenarios. Okay, as you can see, the first resistance where I took the profit, the price has went up, retest it, and then now it's going for the second FIP resistance. As you can see, this line here was, or rather is, the liquidity. If you scroll the time chart to the left, all right, and I had in my previous video bring the line of the liquidity here, just show that so that I can know how far they have gone up. And then there's all the blocks up here with a resistance up here. So because it's Friday today, I'm not sure if price is going to keep going up today. So I'm thinking that there might be some profit taking back down before the continuations up. All right, so how do we track the candlestick such that it is actually going down? Okay, it doesn't mean that there's a block here and it will always go up there. No, because there's a few things. Is time of the week, day of the week. All right, and like what I say is already a Friday. Not sure whether the momentum is there to go up there. And for a healthy bullish trend, it's best that some retracement happens before the continuations. Alright, now having said that, if it keeps going up today, then this block will be a better chance of taking a sell down. Alright, now however, if there is a higher, bigger agenda from who, I don't know, I'm just thinking aloud, for price to go above here, then the logical way would be for price to come down first and then go up. Alright, and then keep going higher up. Hope that it makes sense as per the idea of healthy bullish trend. Need to retrace, go up, retrace, go up. Okay, so let's get ready for that. So what I'm going to do is I'm going to stick to the daily routine quickly, and then before I show you how I will track whether the price is coming down. And just before everything, I am still a higher time frame bullish. All right, but then if there's opportunity for a sell, okay, just remember this is the 8 hours chart and there's just so many bullishness. I think it's a good idea to also look at the sell and come up. Okay, and we're looking at a sell as a retracement, not a expansion. Okay, just a retracement to go expansion up. That's the whole idea. All right, let's move the 8 hours range box, because the first candle has gone up, the second candle, as you can see, is fully above, and there's just a little bit of the wick, all right, for this candle, and it's still bullish. So I have to move the 8 hours range box up there. Right, so here we go, move it up here. So that is our 8 hours range box. Right, and then the previous day I have to go to the 1 hour chart, and it's pretty simple here. Previous day high, previous day low will be here, and then 50%, the midpoint will be just here. Okay, let me just remove this And there we go, we have our previous day midpoint, high, low. Yes, where is the previous week? Hang on, previous week must be so low at the bottom. There we go. You can see that how much movement is for this week. The previous week high was there in Monday opening, and here we are. All right, so the temptation for it to retrace, is there. So let's look at how many pip it was from Monday opening, from here to the highest, which is that is 314 pips. 314 pips since Monday. Okay, is it time to retrace? I think so. Okay, but again, we just got to follow the candles. Right, so here we have this. Okay, let's go to, so now is, 1 hour. Let's go to the breakout buy and sell, which I have drawn. Okay, basically the idea is the wick and the body, I have the breakout buy, the wick and the body, I have the breakout sell. So that's it, very simple. So on a higher time frame, how do I know whether price is actually coming down? Very simple, all I have to do is draw the trend line. Okay, so I have the first trend line here, 0.1, 0.2. Right, let me just remove a few more charting things so that it's clear for you. Let me remove this. Let me remove the fib. There we go. Okay, is it more clear now? I hope. All right. So I have a trend line here. Why is it a trend line there? It's because I don't want to go too much further here. Okay, I can actually, but I'm just going to start from here, 0.1, 0.2. I have a trend line. Okay, let me just do that again. 0.1, 0.2, I have a trend line. Then from that point, I draw another one. This will become 0.1, 0.2. Okay, and then I draw another one here. Then this will become 0.1, 0.2, and then I draw another one, more tighter one, right here. Okay, then this will be 0.1, 0.2 here. So you can see that it seems to be like what you call it, a fan, isn't it? Okay, so the theory would then be, if price is to come down, how far it will come down. Then the idea is that price has to break this trend line, and the idea of going from one trend line to the other. Okay, then you might just come down here, break this trend line, come down here, break this trend line, come down here, so on and so forth. That's the idea. But you need to take note of something, which is how far it will come back down. Then you need to use a fib. Okay, now for this leg here, I'm just going to run a fib from here to here. Okay, the idea is to go for the 50% retracement. Right, so let's do this. Let's do the fib from here to here. Okay, so technically, okay, let's go to the hour. Right, so technically, if based on the 8 hours last bullish leg, the 50% will be here. Okay, so if Friday is to take profit, it has to break down the sell zone, wait for the first candle, second candle, it might rebound here. It have to go below the 8 hours range, the bottom of it, close below here, wait for the second candle, it has to close below the midpoint, then only has it retraced 23.6%. Now if this bullish trend is pretty strong, it could simply bounce off from here and keep going up. Alright, but then if there are a lot of profit taking today, then it might go deeper from this trend line all the way to previous day low here, okay, or even go to this trend line, which happens to be the 50%. All right, so there is a potential retracement of this level here for Friday. All right, and of course this is just a theory. What could also happen is you might just bounce here and then just keep going up according to this trend line. Yep, in order to go up to the order block here, okay, thereby clearing the liquidity here. All right, so these are the two scenarios that is potentially happening. So which way you want to trade, especially on a Friday, it is really up to you, and whether you are sitting at a chart, whether you are looking at things that's happening. All right, so yeah, so what we have here is we have 1, 2, 3. Okay, neckline will be somewhere around here, which happens to be here. So you really have to wait for confirmations of it coming down, okay, before you start selling. Right, taking the Friday profit taking as a momentum. Basically, that's the idea. Don't forget, you could be trading the bearishness based on a retracement. Okay, remember it's not an expansion, so price could shot up pretty quick into the expansion mode. All right, that is why I try not to take the sell, okay, until there is really an opportunity, and today seems to be like it. All right, and I had yesterday talked about this could be a potential head and shoulder, okay, but obviously as you can see, the price went up on the right hand shoulder instead of coming down here. Okay, so this is what I am showing you and telling you today. So just watch the candle, how it forms, yeah, and then you decide whether you want to play the up or play the down. Okay, remember it's Friday, you don't have to trade, just watch. Okay, sometimes it's just a good feeling to watch and see that the scenario play out, even though sometimes we don't make money out of it, but then as long as your theory works, the scenario play out, then if you run a scenario again, you have a more confident of taking actual trades. All right, so that's all for today, and I hope you enjoyed this video. Join my Discord group. Sometimes I don't do video, I just post on the chat, and also if possible, if you can like this video if you like it, and it helps me to reach more audiences. Okay, as you can know, I don't charge any money at all, and whether you join my Discord group, the idea is that the knowledge is always free. There's no need for me to charge you. Just make money from the market. Why do I have to charge you, right? I mean, I give it to you for free and everything, and you know, it's really up to you to make use of the knowledge. All right, because if I start charging you, then I have to sort of guarantee your profit. Does it make sense? You know, so give it as a free, because the issue is not about the method. The issue, bottom line problem, is your mindset. Okay, your mentality. Whether you believe in the method, whether you want to click on mouse button to take a trade, it is all on you. Okay, I can tell you now to take a sell. Would you do it? All right, would you trust me? Would you like trust the chart? Would you trust yourself? So no, everything is in your brain, your mindset. Okay, so you need to solve the problem of your mentality before you can actually start believing in which method you want to use. Okay, so you can see that everywhere YouTube, there are people making money here and there, left, right, center, and of course there are many more who didn't make money. What is the difference? Everybody is using the same Fibonacci, using the same trend line, using trading views. You know, why is it that they are successful and you are not? Because it's the mindset. It's your belief. All right. Before I keep yapping away, that's all for today. Thank you very much.